It seems that China has yet to overcome investor skepticism regarding truly efficient stimulus for its economy. And in any case, another meeting of the Finance Ministry is scheduled for Thursday, where Beijing plans to discuss promoting the sustainable and healthy development of the real estate sector. Besides, on Thursday, the European Central Bank will announce its policy statement following the two-day meeting. Most experts are confident that on October 17, policymakers will cut the refinancing rate by 25 basis points. Such speculation only emerged in the past few days. A month and a half ago, the European Central Bank had already slashed the rate from a 4.25 to 3.65%. Following this jumbo rate cut, everyone was confident that interest rates would remain the same for the rest of the year. But starting this week, market participants are losing this confidence for obvious reasons. Firstly, inflation in the Eurozone continues to steadily decline, and secondly, industrial production unexpectedly expanded by 0.1% instead of dropped to 1%. Now, the most likely forecast is that the European Central Bank will continue to implement gradual monetary easing from the meeting to meeting. In fact, ECB President Christine Lagarde had previously stated that confidence in a fading inflation would be reflected in the bank's decision. Amid the ECB's dovish monetary policy, the euro is set to weaken. Yesterday's strong statistics helped the single European currency avoid a larger sell-off. In the long term, the euro-dollar pair is likely to drop due to the strengthening of the US dollar. For example, today, the greenback rose amid falling stock markets, which increased demand for the liquidity in the US currency. It's an index which tracks the greenback's value against 6 major currencies, opened today higher, following an uptrend within the daily range of 103.10 to 103.40. Statements from financial policymakers also contributed to the pressure on the euro. For instance, San Francisco Federal Reserve President Mary Daly explained that the rate cut by the Federal Reserve last month was a recalibration. She also indicated that the 2 more rate cuts of 25 basis points are likely this year. However, her colleague Raphael Bostic from Atlanta is planning only 1 more rate cut by the end of 2024. These statements boosted the US dollar so that its index approached the highest level in the past 2 months. In the euro-dollar pair, the dollar was not even faced by the fact that the Eurozone's economic statistics were more favorable than those of the US. Today, the macroeconomic calendar is practically empty. Amid all these factors, the euro-dollar pair once again tested its lowest level since August 8, around 1.0882. After closing in the red yesterday, the instrument opened on Wednesday below the critical round level of 1.09. It seems that with the significant events on the horizon, such as the ECB policy meeting and tomorrow's Eurozone inflation data, traders avoid opening risky bets. Therefore, the market is likely to consolidate around current levels. The euro-dollar pair remains under downward pressure from the US dollar and could extend its decline with the risk of breaking the lower border of the daily range between 1.0879 and 1.0898. However, analysts assume a possibility of a bullish correction. This could even lead to a test of a resistance around 1.0945. Nonetheless, the overall trend remains bearish. In this case, the potential target is the support area near 1.2805. As for commodity markets, the lack of news from the Middle East has calmed buyers. In the meantime, oil prices are consolidating around current levels. For instance, the benchmark Brent crude opened today trading within the daily range of $73.9 to $74.9 per barrel. However, everyone is aware that this calm is temporary. The hostilities will not subside in the near term. At the same time, the risk of the conflict expanding remains extremely high, with the more Middle East countries being involved. Thus, oil prices could surge again at any moment. Much will now depend on how the developments are covered by major Western news agencies. At the same time, the prospects of oil supplies to China are very unstable. As long as Beijing is only promising stimulus measures, traders will remain nervous. Incidentally, another press conference in Beijing is scheduled for Thursday, where measures to revive the housing market and overall economic recovery will be discussed. In fact, it was China's construction sector that triggered pressure on the yuan at the beginning of 2023. Nothing has changed since then. The yuan has weakened by 1.3% against the US dollar this month. As for the position of the Chinese currency against the ruble, the Bank of Russia surprised the market yesterday. The institution sharply increased the cost of yuan currency swap operations, raising them by more than 3 times. The fact is that the Bank of Russia provides funds through these operations to hedge currency risks. However, according to Governor Elvira Nabiullina, banks have been using these funds for financing purposes, and such actions contradict the regulator's primary objective and even provoke high volatility in the ruble. As a result of the Bank of Russia's actions, a slight panic emerged in the market due to the concerns of a potential shortage of yuan. This triggered a sharp surge in demand for the yuan and thus resulted in a sudden weakening of the ruble. If there is no shortage of a currency in the market today, the ruble will also actively return to the value of early Tuesday. If the deficit becomes relevant, the Russian currency will weaken even more. That's all for today. We monitor developments in financial markets. Subscribe to our channel and stay up to date with the latest news with us. See you tomorrow!